Hello viewers, in this video I'll be going over natural gas ETF ticker symbol UNG. Today we will go over day-by-day probabilities, and we will also go over the forecast model for natural gas. So on the technical analysis, we will see the 1 hour chart. On the 1 hour chart, we are touching the oversold RSI, the 1 hour MACD dipped to negative. As for the 4 hour chart, we start to see a divergence overnight, and we begin to see negative MACD as well. And for the daily chart, we have not approached all-time lows yet. We are quite close to it, but I do see us having a chance to hit the 9-day moving average, this blue line, and we start to see a slight convergence that dated back to December 19th. However, since this dip, we might see a divergence on the daily MACD. And also, one thing to note, we have not hit any oversold RSI lately, even the all-time lows back in December 9th. So that is a big concern that we may head lower. So at the moment, our next support will be this all-time low at the price of $16.88. For resistance, we are seeing resistance that dated back to December 20th, slightly touching the 18-day moving average, this purple line. So that is our immediate resistance. And since we are below past support, the support that dated back to November 29th and December 2nd, since we are below that price, that is acting as our immediate resistance as well. So if we were to move down lower, that price movement is roughly around 1.9% to the downside, and if we were to move up higher, that price movement is 4.3% to the upside. So on the day-by-day probability model, I'll go over it, and right now we see a tight concentration between the first standard deviations and no extreme cases where we see 20% down or 20% up. However, we have a slight chance of hitting between 23% and 11% down. I wouldn't bet on it. We will most likely have concentration around this price range. At the moment, we do see natural gas down 11% and up 11% within the next couple of days or 7 days. So let's head to the forecast model. I'll go day by day, where natural gas will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend. This trend dates back to September 27th to today in 2019, and then this trend dates back to August 24th, 2016 to November 17th, 2006. So let me point out why these two charts are similar. So what we have here in the beginning of the trend, we started off slightly below the middle Bollinger Band, and then we proceeded to touch the upper Bollinger Band next. After touching the upper Bollinger Band, we take a slight detour and continue down lower, touching the bottom Bollinger Band as well. So we see those price actions, and on the trend in question, we start to see a similar pattern as well. In the beginning, we saw a slight dip in the middle Bollinger Band, and then next we proceeded to touch the upper Bollinger Band. Afterwards, we took a leg lower to touch the bottom Bollinger Band as well, right towards the end. And we also have instance where we slightly revert to mean in the middle Bollinger Band right towards the end. And let me just mark that on the current trend. We took a slight detour today. We dipped lower as we were trying to revert back to the mean and touch the middle Bollinger Band. But I do bet on us touching this middle Bollinger Band as well. So what we have is 1, 2, 3, 4 points, and we also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same, the outcome and forecast should be fairly the same. So the model that we just examined was August 24th to November 17th, 2016. Back then, natural gas was up 14%. So that is one of the extreme cases that I indicated on the day-by-day probability model. So there's a possibility we may hit in the next couple of days. So I don't bet on it. That again is only 10%. There's higher probabilities that these standard deviations may occur. Or I should say we have 30%, not this. This is down 14%, and what we saw was up 14%. So what we can bet, there is a slight favor overall. Again, we don't see the high concentration is not above 50%, so it's only 30%. So do take that as a grain of salt. And this is the model that I reviewed. It happens to be the best match to the current trend right here, and overlapping it is the 2016 model. So again, this model is now available in the link below, so do check it out for natural gas. We have natural gas and UGAZ, DGAZ. If you configure models, you can go over the models that I do not go over with in the video. So do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.